Greg is Vice President for Residential Lending at Tompkins Trust Company and an incredible pillar of our community. I can't count the number of organizational boards to which he volunteers his time. I know there's Better Housing of Tompkins County, the Red Cross, and United Way, in addition to our committee. And while he's been joined by many other professionals on our committee, and he's not done the work of untangling the mortgage implications of gas drilling alone, he has been the mainstay and the anchor of this effort. And he's willing to share some of this work tonight. We just ask that if you have further questions after tonight, that you go first to our website, which was on that last page. It's tinyurl.com/gas assessment. Will get you. That's tinyurl.com/gas assessment, and you can get to some of Greg's and our other materials, and come first to some of the rest of us, so that we can let Greg get on to his business of disseminating this information to the other lenders around the state.
Good evening. I'm going to take just a second or two to give a little bit of background before I jump in, though. One of the things that, as a banker, I have to be careful about is taking pro or con positions, because I've got so many people that bank with us. So the purpose of my comments is not to take a pro or a con position. It is really to present some facts to the group tonight. Hopefully that's going to be helpful for you. Let's talk a little bit about the secondary market. It's gotten quite a bit of a negative rap over the last few years. Banks typically, or lenders, as Carol said, which I agree, I think is probably an easier word, typically would make mortgage loans in the community based on deposits coming in. So if $100,000 in deposits came in, the bank could, in theory, make a $100,000 mortgage loan. Well, as you can see, as population grew, there was more demand for mortgages than there were deposits coming in, so the advent of the secondary market. And that actually came about with FHA and VA right after World War II. It has expanded with Fannie Mae and Freddie Mac in the conventional sense, really in the 70s. So without the secondary market, without Fannie and Freddie, without FHA and VA, every lender would exhaust their supply of funds for mortgage loans in a short period of time, and then they wouldn't be able to loan anymore. So the advent of the secondary market is a really good thing, because it does give an opportunity for us as lenders to be able to utilize some resources like Fannie Mae and Freddie Mac, because I'm going to talk about them in a minute, to be able to make an ongoing flow of mortgage loans available at very competitive rates. But when we do that, we have certain rules and regulations we have to follow. So I'm going to talk a little bit about those today and give you a little bit of a sense that they are in conflict with gas drilling and compulsory integration. Boy, I was worried about saying that. That's a really hard word to say. No opinion is being expressed or implied. I think I've mentioned that. I've covered my base there. What I don't want to do is get into a situation where I'm trying to take a stand. What I am trying to do is point out some conflicts. One of the first, if you could scroll up on that a little bit. I didn't do a PowerPoint. Number one, I'm going to find that I'm going to be better off taking this off and carrying it probably. Good idea. Why didn't I think of that? Number one, surface and subsurface rights, and I want to talk about those just for a split second. Surface rights, pretty simple. It's the surface of the land. Subsurface rights, when you buy real estate or traditional fee ownership of real estate, our attorney friend here can probably explain it a little bit better than I can. Really, you're buying a wedge of property from the center of the earth to the heavens above. And it's everything in between. So you are buying the rights to everything in that wedge of property. Fannie Mae and Freddie Mac both have very similar guidelines that say surface or subsurface rights within 200 feet of a residential structure would not be acceptable for Fannie Mae, Freddie Mac financing. It's pretty cut and dry. Now, there are some caveats. Unless you've got a long history and can prove and whatever. We don't in New York. We just don't. I mean, the traditional drills that we had in the state, straight drills, we didn't loan as residential lenders on those properties in the past. So Fannie Mae and Freddie Mac are very clear. There's a section of the guideline there, 39.4, that actually spells out specifically. I'll read some of the wording there to you just to give you a sense. The exercise of such rights will not result in damage to the mortgaged premise or impairment or use of marketability of the mortgage premise for residential purposes, and there is no surface or subsurface entry within 200 feet of the residential structure. It's pretty clear in my mind. I have talked this over with a lot of attorneys. We have gone actually to Fannie Mae, Freddie Mac, to FHFA, Federal Housing Finance Agency, and all of their response was, our guidelines have been in place for decades, and we are not going to change them. You as the lender are responsible to assure, if you're going to sell a loan to us, that there is no surface or subsurface entry within 200 feet of the property. It's as simple as that. So it's a conflict. Whether it's compulsory integration or it's someone signing a lease, it's a conflict. Number two, there's some title insurance issues. These exceptions, title insurance ensures that the property does not have any liens or encumbrances on the property. Lenders traditionally require that. The vast majority of mortgage loans have title insurance. If there's a gas lease on the property, you're seeing three fairly common exceptions that do not insure against loss or damage for the lender. If there's any structure that exists over 35 feet tall, if the property is used to store any material, machinery, or supplies other than during construction, and if the property is used for any commercial purpose except for a simple office in the home. So if there is a gas lease on the property and we try to get title insurance, there's exceptions to coverage which would make it unavailable or not saleable to Fannie Mae, Freddie Mac, FHA, VA. Again, a conflict. Number three, and you got to scroll, there we go. There's not a cost-effective or reliable way for residential property that has a gas lease to be known. That's where Barbara has come in and been so helpful with some of the bills that she's introduced to try to get, and by the way, don't copy this stuff down. I've got handouts. I'll give you a copy of it. Barbara has introduced some legislation that requires the gas companies to file the full lease, and to do that in a timely manner. One of the things that happens is if there is something filed, it might be a memorandum of lease that doesn't really give enough of the detail for the appraisers to be able to say, I'm comparing apples to apples. I'm comparing a 3-bedroom, 1.5-bath ranch here that has a gas lease to a 3-bedroom, 1.5-bath ranch here that has a gas lease. There's no cost-effective way to do that, especially with the way leases have been recorded in a sense of memorandum. Since there's limited historical data on sales of properties, and that's one of the caveats that Fannie Mae and Freddie Mac says, unless you can show us historical data that says that there's no impact on value or marketability, we're going to go back to the 200 feet thing. Since there's very limited historical data on sale of property with leases, there's no way that a lender could in fact represent to Fannie Mae, Freddie Mac, the secondary market in general, that it in fact has statistical data to support that. Again, one of those conflicts that we run into. There's two here that I'm going to talk about maybe just a little bit more in depth. A residential mortgage document, many of you have probably signed them. I've got a blank copy here. Ken has seen these I'm sure over the years as well. Most of us have signed these. Has a number of, and it was redesigned in 2001 to be simple language. So language that you and I could read, not just poor Ken and attorneys that went to school for 100 years to learn how to read it. It became simple language. There's two paragraphs, two areas here that cause me a bunch of pause. Number one is section 18 of the residential mortgage, every one of you, well, I shouldn't say everyone, anyone who has a mortgage and has had a mortgage since 2001, which was the last time this one was revised, would have this exact document. I can't imagine any lenders out there that are not using the standard Fannie Mae, Freddie Mac documentation any longer, even if they're not selling the loan. But there's two caveats. Number one, Section 18, standard Fannie Mae, Freddie Mac mortgage prohibits transfer or sale of any portion of or rights in a mortgage property without the prior written consent of the lender. Prior written consent. So those people who have gone out, got a mortgage, and then signed a gas lease are in technical violation. They're in default under the terms of their mortgage. Now, Ken and I talked about that. Would any lender in their right mind want to foreclose on someone because they're in technical violation? Probably not. But at the end of the day, it is a technical violation. You've signed, when you signed that mortgage document, you as a borrower agreed that you would not transfer without prior written consent any of those rights. You cannot sign a gas lease without getting a prior written consent. And the lenders that are asked would say, no, I'm sorry, we won't allow you to do it. We will not give you permission. Section 21 talks, of that same document, talks about environmental issues. It actually goes on, and it's a very, very long portion, but it defines what they believe are some environmental issues that are concerned with. But here's the caveat. It defines gas very clearly, and the exact wording: I will not do anything affecting the property that violates environmental law, and I will not allow anyone else to do so. I will not cause or permit hazardous substance to be present on the property. I will not use or store hazardous substance on the property. I will also not dispose of hazardous substance on the property or release any hazardous substance on the property, and I will not allow anyone else to do so. So if you've signed your mortgage, you've said, I'm not going to let anybody, and by the way, in that paragraph it talks about, except for use like you got gasoline for your lawnmower or your snowblower, we're talking about major industrial purposes. You have already, when you've signed your mortgage, 99% of the mortgages or this document have said, I will not do this. And I won't allow anyone else to do it. Again, a technical violation. Would we foreclose as a lender? Probably not. But keep in mind, any gas lease that is signed after a mortgage is recorded is subject to our mortgage. And, you know, those gas companies need to, and most of them do, for you or for anyone to sign a gas lease, they have to get prior written consent before they can do any work, and they have to agree to the terms and conditions. I think gas leasing and residential property have some conflicts here. It certainly sounds it to me, doesn't it sound? Traditional homeowners insurance, we're seeing more and more homeowners insurance that actually have, and this poor fella's trying to follow me as I'm bouncing around here. Traditional homeowners insurance, fire insurance, has started to add some exclusions where they'll exclude coverage if there's commercial ventures on the property. We could talk about that for another 30 minutes, and I'm not going to do that. Here's the last one I'm going to really spend much time with. I've talked about Fannie Mae and Freddie Mac, which are conventional financing, but FHA, and oh, by the way, State of New York Mortgage Agency, Sonny Mae, which is for first-time home buyers. It's a state-mandated and run program. They adopt Fannie Mae, Freddie Mac's guidelines, and I've had numerous dialogues with them, and they are aligned with the 200-foot setback. FHA, and number 8 here, surface or subsurface rights within 300 feet of a residential structure or 300 feet of the property boundaries will not be acceptable for FHA financing. And FHA and VA follow about the same guidelines. So it's actually even greater distance for FHA and VA financing. It's 300 feet, and it's not from the residential structure. It is from the property boundaries. And again, I've had numerous dialogue, and they keep coming back saying, you as a lender must assure that you are in compliance with our regulations, and our regulations have been here for decades. Last one I'm going to do is, I'm not going to bore you with a lot of these. Lenders are responsible to warrant that they have reviewed the title and met all these criteria before any of the loans are sold to Fannie Mae, Freddie Mac, Sonny Mae, FHA, and VA. And I would find that difficult to do as a responsible lender. And any of you in the room who have stock of my organization, I would not be doing my job if I, in fact, warranted when I knew that there were issues. So we are having more and more difficult conversations with borrowers. And again, I'm not taking a position either pro or con. I'm just saying the traditional things that are granted under a gas lease and the traditional things that are not allowed under a residential mortgage are in conflict. And I'm going to suggest, I've written a draft letter up here. I'm going to suggest that if you're really passionate and interested, as I am, that maybe you take the draft letter and you put it on some letterhead and or something like it, and you get it off to the DEC and let them know that there's some issues. Now, that's just the mortgage piece. There's a whole lot more behind this. We've heard some other folks here. But thanks.